Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar has failed to break out of its 4-day bearish streak since the rejection from the crucial resistance and also the 60-day moving average of 74.55.65. The Australian dollar pair has struggled to stage any meaningful recovery and therefore has taken on the challenge to the downside and crushes the support of 72.55.65 bullish camp. With the overnight low of 72.23 is the fact that the market is still remaining relatively negative and now likely to set sail towards the region of 69 cents as an objective. Looking to the upside, the resistance is now located at 72.70 as minor and slightly firmer at 73.15. With the US dollar recapturing its bullish charm overnight after rebounding off the lows of 96, the market is focused back towards, for the euro, at 112.85. The overnight rally for the dollar index posted a fresh high, should I say, of around 14 months of 96.65 and is currently holding at 96.55. With the outlook still holding negative, a break beneath the level of 112.85 would expose the next target not seen until 111.40.55. So quite a big drop. So do keep that in mind. Fresh rallies now look to see the resistance of 114.20.35 to cap. With all the stops taken out after breaking this short-term uptrend, is the market recapture this bullish sentiment overnight? And also with the easing of tensions in Turkey has recently underpinned the pair, with the market recapturing its bullishness, now looks towards the region of 111.45 or even up towards 111.60.70 and reassess from there. Support on the day is seen at 110.70. Overnight, it's interesting to see that the British pound had mixed reactions after the release of the latest UK jobs report. The pound had initially rallied to an intraday high of 128.26 before tumbling after the employment rate declined from 4.2% to its lowest level since 1975 of 4%. However, the wage components yet again disappointed the Bank of England, no doubt, with the average weekly earnings at 2.4 missing expectations of 2.5. With the Brexit talks back on the table, the focus will be back on the pound, and if we are hearing of a hard landing for the Brexit, then the pound may take out this level of 126 and therefore expose the region of 124. Resistance is seen around 127.65 to 128.05. With the dollar index strengthening overnight, gold is still maintaining above the level of 118.90. Now with this level, I still expect to see the market hold and eventually turn away from this level and look back towards the region of 12.20 to 12.40. So it may stand quite a long way away, but after posting a low overnight of 1,191 is that the market should eventually snap back to the upside. I'm not negative down here, and I do expect to see a rally very, very soon. Finishing off with oil, the market took a stab up the upside of around near that 68 mark, but failed and tumbled heavily back to the $66 a barrel. A trigger beneath here would see 62 as a bearish case, and therefore look for further weakness from a technical point. You can see here the RSI was rejected, so I do favour a further weaker oil outlook and keep to my target of $62 a barrel and still sell rallies towards the 68 level. Well, that wraps up for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the rest of the day that's ahead.